Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, the energy sector is probably going to be the hottest play over the next few months, even probably better than Bitcoin's going to do. We're going to tell you why. There's actually a lot of implications here. Who knows? We might actually have another gas shortage like we did back in the 70s. We're going to talk about the details, why this matters a lot to you. So let's dive in.
Trade Genius.
All right, Bob. So the data has been coming out. I think today we saw some graphs that were really striking in terms of what I think might possibly be an energy crisis for us here in the country.
Yeah, I mean, look, we showed you some charts yesterday, but comparing when Trump was in office to Biden being in office and the rectangles for oil. Well, oil's been unrelenting. Supply is being constrained. Demand is not. And that's a recipe for a launch. The other thing, too, we're going to show you guys some charts that show you how under-owned energy is and why I've been pounding the table for the last 2 years for people to get positioned in energy, and now it's starting to pay dividends. We're going to show you some charts, too. But our lead-in right now is basically there's no plan B. Now, the Biden administration and the clean energy freaks and the WEF and all these other people who really want this to happen, I don't think they really realize what will happen if this happens. Jimmy Carter could give them some advice. And if they are able to position a shortage of gasoline, gas is going to get unaffordable. We're going to have a situation where it's unaffordable and unavailable. And people think, oh, we're going to stick these people in 15-minute cities. Well, the elites may not survive it. And I think there really, really is a problem. And Phil, what's the next chart you want to throw up here? The Permian Basin one?
Yeah, kind of leads us down this path of why we got a problem here with energy.
Yeah, the rig counts are collapsing. And that means the United States is no longer really the swing producer of energy in the country. And we got that crazy man up in, the Cuban Trudeau up there in Canada trying to do the same thing. And that means, we're not going to be able to blunt what the Russians and the Saudis are doing. And also the Fed can't blunt a supply issue. And here's Bidenomics at work. Show us another slide, Phil. This is awesome.
Yeah, the SPR slide.
Unbelievable. People are saying this was a good thing that he did. So all he did was drain our resources, and he sent it to China, who filled their strategic petroleum reserves.
Right.
And, under the guise of, well, we got to keep energy prices down for Europe so that the Russians don't have leverage. Well, now we don't have any leverage. It's absolutely insane. But we're not done yet. Right. Phil, throw the next chart up here.
Yeah, and if I might add to that too, it's like that whole drawdown was to try to fight the fuel inflation, right? And so now we're in a situation where it didn't do anything. Gas prices are as high as we've ever seen them. And they're going to have to add back to this SPR, which is going to add further pressure on supply. And then, Bob, for the Permian Basin, for those that aren't familiar with it, what is the Permian Basin to the U.S.?
Yeah, the Permian Basin is like this Saudi Arabia, the United States version of Saudi Arabia. The Permian Basin is where we just suck all the oil out of the ground. It's easy to get to. It's high quality crude. It's, it's in Texas. And this was our renaissance when we drove oil down from $185 a barrel down to minus $58 is because of the Permian Basin. And now that's starting to, I don't want to use the word dried up because they could draw a lot of oil out of the ground there. It's just that they're just making it very, very, very difficult for these guys to get financing. Right. And, with the games they're playing with the ESG stuff, and this is going to come back and it'll result in higher oil prices.
Yeah. So if you are smart money, that's the game, then we might be seeing that big rotation, and we're going to get into that a little bit more here in the slides into energy. So that's why we think that potentially this could be the greatest play right now, even over Bitcoin squeezes. So the next slide, weaker sentiment through higher gas prices suggests recession. I think this is an important slide, and let me break it down for you a little bit. The black line is the real PCE, right? You guys know that the Fed really concentrates on PCE, personal consumption expenditure, as a measure, really what they want to fight in terms of inflation. Real PCE means that it's just adjusted for inflation. But if you notice that dashed line there where it's circled, that is if you were to calculate real real PCE using gas prices, income, wealth, and real rates, which I think is a little more accurate, and it has a predictive quality to it. And you guys can see it's diving down here. And also, when we start getting down to these levels, it becomes a recessionary predictor. So essentially what it means is high gas prices it typically is going to be a leading indicator of a recession. And as you guys can see, it doesn't look like gas prices are going to come down anytime soon. We've depleted the SPR. You guys see that the Permian Basin output is hurting here. It's dropping. Biggest decline there since we've seen from COVID. So what do you think price is going to do? And then the next slide we had, Bob, was exactly what we're talking about. What does energy do into a recession? Can't get any clearer than this, right? Hard landing versus soft landing. Purple is what energy does in a hard landing, and that turquoise color line is what happens in a soft landing.
Hey guys, if you guys don't mind, head over to tradegenius.co. Check out our specials we have over there. There's a number of different specials with different packages for all different experience types. If you're more into education, we have a package for that. If you just like to get into the room, primarily, we have a package for that as well, where you can see where we're calling out trades and things like that live, and also posting signals into our Discord signal rooms. So check it out, tradegenius.co. Appreciate you doing that.
Yeah, and I think we're heading hard landing. And just think no landing is because energy prices took off. Okay. And that's what's happening here. That's why we kind of teased you guys with that slide earlier in the week about what crashes first. Energy, if energy keeps going the way it's going to crash the stock market. So just buckle up, Buttercup, because it doesn't look like it's stopping anytime soon. And the Biden administration's powerless to stop it. All they can do is scream.
I would agree. Yeah, at this point, the one shot they had to fight it's gone. So now you have no reserves, you have no bullets. And then you had an interesting chart here. I'm not a huge dot plot guy, but maybe you can explain this.
Yeah, it's really simple. So if you're looking at that vertical axis and the horizontal axis, the E&P companies, which are your exploration and production companies, the big multinational oil companies, is that their return on equity just blows away any other industry group. And the other side of it is leverage. And they're the most unleveraged of all the sectors. So you should be pouring your money into energy, and you should be taking your money out of the tech chip companies. That's what this is telling you. And you should do it. You know, I'm going to show you a chart in a minute to just show you just what kind of leverage is going to show up here really soon.
Yeah, so basically dots on the right, good investment. Dots on the left, not so good investment, right?
Yeah, you sell top left, you buy bottom right.
Yep.
And then here's my family's largest position, and we've been accumulating ExxonMobil for years, and we've done some acceleration here with the pullback with COVID. And so if you look at this chart of ExxonMobil, you could probably say the same for Chevron, the same probably for Shell, but I own ExxonMobil. And so we've been gliding up here ever since we've come out of the COVID low. We're putting in a what I would call it an ascending triangle. We've had this double top, and we've been climbing up basically last month from 100, but we've been climbing up from $60 on ExxonMobil, and we got a situation now where there's no such thing as a triple top. So we're going to have kind of like a W or or a backwards cup and handle fill. And this thing, you measure the move an ascending triangle here from the biggest part of the wedge, and we're looking at ExxonMobil at $155 here.
Right.
You know, going into 2024, if it breaks over this 119.74 area. And so, yeah, it's this beautiful thing. It pays 4.5% dividend while you're waiting. You can sell calls against it while you're waiting. We do all of the above. We get a beautiful yield out of ExxonMobil, and it's driving higher. Now, you just got to remember, Oxy and Chevron, Buffett's been buying these things for the last 2 years, and he's been adding to it as it's going up. Okay, so, he's not stupid. He can read dot plots too. So this is why when you guys, especially the trolls out there, you guys are so bearish. Well, this is when I'm bullish. And that's why I'm bearish on the economy, because oil is going to blow the economy up just like it did in 2007, 2008, and just like it did in 1973 and 1974. So I'd rather be on the blower upper than getting blown up. And that's why we want to show this stuff today.
Yeah, I really like this chart too on a weekly basis here on this chart, and especially you got the formation as you mentioned, the triangle there, but it's almost like a cup and handle too in a way, where you come up to the previous double top there, which in the technical world we call that a poor or weak high on a weekly basis. So for me, as long as you don't do one of those stabs above and close back under on a weekly basis, what I'd want to see there and what I think we're going to get is a pretty strong weekly candle that prints higher than that. Maybe over the course of the next 2 to 3, 4 weeks, we'll get that one candle that just prints a nice weekly close right over that 119.74 level, and then you're going to have big money start pouring in on especially when you get a weekly breakout like that. The institutionals will tend to follow that. Those are very, very strong indicators. So that's what you're looking for to confirm that if you want to be more conservative. Otherwise, I think you can get in early here and just look at the data underlying to kind of foretell that that move's probably going to manifest. And then I really do like your target up there at 155.
Yeah, and Phil, September, October is bullish oil and it's bullish natural gas. So they have a 6-week seasonal here too to help us. And especially if the market softens in October, which we expect, we think this is the reason for the softening. And this is probably the opportunity for ExxonMobil. Look, they've been very conservative too. Probably one of the best run companies out there. And I think they use their cash wisely to drive equity growth. So anyway, I hope you guys enjoy this. We've been trading it in the room. I've been showing people how to do this since it was down near below 100 there. And when it touched down at 101, 102, I said get long. We've been riding this thing all the way up to hopefully to 119.74. Then we'll evaluate like Phil says. And if we break through, just hold on for 155. It'll be an awesome ride.
All right, guys, well, let us know what you think. Do you think energy is going to outperform everything? Because we think it will. Let us know your thoughts below. As always, thank you for watching. Please hit like and subscribe. Check out our specials over at tradegenius.co. We'd love to see you guys in the room. We'll see you on tomorrow's video. Take care.
Trade Genius.